Reason number 4 to use Listing Booster. For sale by owners, we have a fantastic strategy in there for loan officers to capture leads off of for sale by owners. Here's the cool part. When a FSBO doesn't sell, which oftentimes they don't, you now have a relationship with that seller and you've got a referral that you can hand over to one of your real estate agents. If they understand our strategy, even your realtors will see the value in Listing Boosters for sale by owner strategy and process. All you have to do is click this banner right over there. Okay, so this is kind of interesting, guys. The Los Angeles Times came out with this article called "Lawmakers Are Fighting Efforts to Rein in Predatory Lenders." Why? Well, first of all, this is kind of confusing. What they're saying is lawmakers are working to allow predatory lending. The CFPB is trying to stop predatory lending, and lawmakers are trying to stop the CFPB from stopping predatory lenders. Now, why is that?
So we read the article, and it says a handful of Democratic lawmakers have joined Republicans in trying to cripple the CFPB. And we said, oh?
We did say oh, because this is really interesting. Republicans generally want to vastly reduce or dismantle the CFPB. So this is a big deal for Democrats to jump partisan lines. So who are these brave Democrats?
It would be Corinne Brown, Alcee Hastings, Patrick Murphy, Debbie Schultz-Wasserman, Scott Davis, Louis Frankel, Kristen Sinema, Kathy Castor, and Henry Kuehler. I hope that's how it's pronounced. By the way, most of these reps are from Florida, and I want you to remember that for a little bit here.
Okay, so what exactly is it that these brave Democrats and all these Republicans are doing to cripple the CFPB?
Well, they're sponsoring a bill that's titled the Consumer Protection and Choice Act. And what it would do is delay any federal regulations for payday lenders for 2 years.
Protection? Protection? What? Payday lenders? Their line in the sand is payday lenders protection? Are you kidding me? It's not policy through punishment, exceeding authority, zero clarity on guidelines. It's freaking payday lenders. Payday lenders are loan sharks and do need to be regulated.
Yeah, forget the big issues. Let's make sure payday lenders have free range to go charge whatever they want to the group of people who can least afford it. Are you kidding me, man? If there was ever a group that needs the CFPB, these payday lenders are it. And that's what these Democrats and Republicans are choosing to foil here? Seriously? Who's greasing whose pocket? Because this one just doesn't make any sense. I mean, for example, and please, listen close.
Bartlett said Wasserman Schultz, a Democrat out of Florida, wholeheartedly believes in the goals of the Consumer Financial Protection Bureau. However, she and her Florida compatriots, the Bureau should use Florida's existing payday loan laws as a benchmark for other states.
Okay, so remember, I said to remember Florida. The Florida lawmakers passed their own payday law and don't like the CFPB trumping them. Is it because the Florida payday law is so great that it should be the standard for the rest of the country? Well, you decide.
Florida payday statutes limits the fees that can be charged on a payday loan to 10% of the loan amount. Costs in the form of a verification fee are limited to $5 for each loan. This is not an annual interest rate, but the rate that is being charged for the specific loan term. For example, a 7-day payday loan of $100 with a fee of 10% would cost you $10 plus a verification fee for the 7-day period. Applying an annual rate, the 10% fee is equivalent of an interest rate in excess of 500%.
Holy crap.
Not to mention, if you can't get a Florida payday loan, all you need to do is go online and get one based in another state. I mean, they're just delusional here.
Who's really protecting who here? If you think about it, if ever there was a group who needed protection, it's the folks getting these payday loans because they, as Frank said, can least afford it. And this is what they're fighting. It's mind-boggling. In the case of payday loans, Richard Cordray of the CFPB said, too many short-term and long-term loans are made based on a lender's ability to collect and not the borrower's ability to repay. Mortgage lending has addressed this issue. But in the case of payday lending, sorry guys, I hate to say it here, but the CFPB, they got this one right.
And passing these types of laws are counterproductive to the actual type of finance reform we truly need. Those payday loan guys are criminals, man.
Oh, they are. In reining them in, and the other part of it is giving the states authority on payday loans, it doesn't change the fact that somebody can get a payday loan in a different state with different laws. And if somebody's desperate enough that they're going to pay these type of rates and fees for a couple $100, boy, they are the ones who can least afford it. Again, if ever to make a case for consumer protection, I'm sorry, this one's it.
I think so too, but we'd like to know what you guys think about this. Maybe we got it all wrong, which has never happened before, by the way. But if we do, let us know down below. Just give us your thoughts and forward, share, subscribe from your upper right-hand corner. We'll catch you guys later here at the National Real Estate Post.